This is Elliot Wave Sage. Let's do a market update. Like always, this is financial advice, so always do what's best for you. So the market is very volatile right now, and it's making traders confused, and a lot of people do feel that a much bigger decline is in progress, much longer decline, and I think neither is the case. The Dow Jones is still in our buy area. It's in our buy area. Okay. Um, we had it labeled as a 1, 2, 3, 4, 5, but it ended up becoming a 1, 2, 1, 2, 3, 4, 3, 4, 5. So it just extended. No big deal. But as you can see, this sequence is almost over again at any moment. SPY did hit our target finally. Had the target at 504. We are in it, and we should be finding buyers entering in this area. So I did my last video, expect more downside in technology and the SPY, and we got it. And here we are. So how many people are buying right now or selling? What should you be doing right now? Think about that. IWM still in our buy-in area, and again, this is due for a bounce. So you've got all the indices really in a buy-in area right now. To negate that, we would need to basically just fall off the cliff here, right? Fall and extend in some kind of 1, 2, 1, 2, 3 of 3. So we'll see if that can happen tomorrow, but right now that's not the case. It's not the case. Then let's take a look at some of the world markets. So the Hang Seng did pull the two that I had warned you about earlier. It looks like that's the price action we're looking at now, correcting the entire move in a bigger decline. It can find support pretty soon here. So getting close. Then just look at some of the others. Bitcoin, we're trying to get that final push lower in this 4. Hopefully we can get it. Oil, struggling here. Struggling. Sell area, we'll see if it can hold. We'll see if it can hold. Silver, 4. We should be pushing up in 5 soon. If we were to just drop, then we'd have to relabel this and call this a 1 and a 2 here. And then it could have a buy area show up at $26.71, $26. So that could be an entry, and then it could become a 1, 2 out, or at least a bounce. Gold, same situation. We'll see if it can drop or not. If not, it would in this 4. Natural gas looks like it did turn lower, and hopefully we continue lower like we expected. The dollar index, again, still looking for this triangle. We had it drawn this way a few weeks ago, changed it a little bit, but now we're back to where it was originally. So I think the dollar is at risk of a reversal at any moment, which should help the market. The 10-year is in our sell area on yields, or buy. The long-dated bonds are a buy here in this area as long as we're below this 5%. The 20-year, and I don't have the 30-year graphed. This is why I picked up TMF. Again, I can be wrong. Do what's best for you, but I'm looking for this next wave down, which should help the market. The VIX is in a 3-wave move in a sell area, and then against this 3-wave move So this should be pretty strong resistance for the VIX here in this general area I have circled. So maybe it can go up, get one more push higher, but it's close to the end of the move of this whole sequence, and then we need to move lower. So that's all the stocks, guys, and then technology. Tesla broke a key pivot today, and I mentioned before it's not the end of the world if you're a bull, because we're only correcting. We're not. This bounce here did not correct the entire leg, nor this leg. It corrected just this. So it's just extended. This part of the cycle is extended right now. So that's what we're seeing take place right now. Something like that. Do what's best for you. We should respect this low at 102, but it could go 143, 132. I mean, it's hard to say where we end up. Now, if we do rip higher, it could start to form a connector for this entire move. But now with this the setup's lost on the bull side unless we can drive lower. If we do a rip higher from here, it's just forming a connector, and the more time we do that, then we're correcting a bigger cycle or even the whole thing, and then it becomes super bearish. So we really want to see some follow through capitulation tomorrow on Tesla if you're a bull, because if you get this relief rally rip, then it is not a good setup. It's not a good setup, in my opinion. They tried to break Apple today, but weren't able to. So this is a key pivot. This cycle was ended here by this move. So if this breaks, you've got 5 waves. A break. That means we're heading lower. We can maybe have to put the one there. If we don't, perhaps this is a higher degree move. Whatever it is, I don't like it anymore. I would be out of the trade with a very small loss. And then I would be looking to buy it again in this 146, 139 area. This would be pretty bearish for the stock market overall if that technical break happens. But for now, we'll just leave it like this for now. We'll see what happens tomorrow. Just kind of looking at some things. AMD, want to see it push lower. Adobe, finding buyers at our buy area. Nvidia, could we be coming out into wave 3 soon? We'll see. If it breaks, then it's just a connector, and we'll go lower, the 700s. Palantir's getting close to the buy area. Shopify making its way to this area, but this is more risky, and I mentioned why in other videos. And then how's Snow doing? Continuing lower. Want to see it get lower. Then let's see. Robinhood, looking for that deeper correction, and again, should make one more push lower. TAN finally breaking down in the final wave. A, B, C, D, E in a triangle. 1, 2, 3 of 3. So we should be getting close to the end for the solar bear market. And that's also a sign that interest rates could be driving lower and not higher, because what I was reading is solar tends to trade lower with higher rates because people need to finance these purchases, and they just can't. So we'll see. Could we get to 36? Should easily get there, but there is a target that we have had for months at 21, and we have that from this connector here. and it really is still pretty clean so far. You know, I could change the label in a little bit, but just keep in mind we could see an extension uh, and get a 1 2 1 2 1 2. So just be careful there too. So it'll be interesting to see if we can bottom early in solar, or do we get this capitulation move coming. And how's Enphase doing? Again, want to see that final push lower. Consumer discretionary. Lululemon, how's that going? Still got to get a lot not interested. Nike is finding buyers here. And again, it looks like we corrected this leg here, right here. So if this is a three-wave move, then this would be an A, B, C. So this would be 5. So this would be a 1, 2. So if this breaks, we should be some kind of wave 3, which could potentially become a 1, 2, 1, 2. And if that happens, then you're going to break this pivot and that pivot, and this is not a good trade anymore out of it. Starbucks should be going lower. Buy at 81.55, and that's that. And then let's see consumer staples. How's that going? Celsius making its way down. Want to get it at 62. Then let's look at Monster making its way down. Okay. Healthcare. UNH was a big play, so we don't have the updated rave count. We had to buy at 535. It bounced at at 435. It bounced at 436. So $1 off, and man, look at that. So more than likely this correction is over, and we are now in a connector or a whole new bull market for United Health. So somebody asked about this a long time ago, so maybe you were in on this trade. And let's take a look. Nothing else worth even bringing up. RXRX getting close to the buy at 6.99, but can go deeper. This is another 401k mom and pop investor. You know, they love this Medtronic one. I have a technical break here. Here you have a connector, a technical break. So even if this X is here, it doesn't matter. This should be making another push lower in the grand supercycle correction because of this sequence right here, this lower low, and they, you know, not. It's messy, but I would be looking for a technical break. This looks like a massive head and shoulders pattern, and when it breaks, we should be heading down to 35.30. So some dark days ahead for this company and stock. You can see what a beautiful top, you know, elegant, but it should break. Yeah, probably, you know, maybe it's even in a 1-2 right now, a 1-2 here. Doesn't matter. I don't really care about it. But yeah, if it could come back down here for an even bigger head and neck, then yeah, this would be the area where it needs to bounce right here for the grand super cycle. Perhaps it can truncate at 45 somewhere here, but just the way it goes, you know, 5 up, pull back. That's how this thing goes. Now we get this push lower, then it should find support, and we should get a whole nother secular bull market later in this company. But right now, some dark days ahead. How's Pfizer doing? Are we finally getting that final push lower? And I think I drew these lines, so we're getting Again, bottoming out here, hopefully. Then crypto equivalents, BCHG, let's see here. Still in the buy area. Here. And then Coinbase, we have a three-wave move. It's in a buy area, is now forming either a low or a new connector wave. We'll see what happens. Let's take a look at ETHE. There's another one. That looks like it has some more downside. We finally hit our buy area in HZEN here. And as you can see, this is too big to be a 4. So that's not. So this is just a 3-wave move up. Perhaps I could force 5 waves. It doesn't matter because we have 3. So this is the area. LTCN is in a buy area here. Mara breaking down. Once it gets to $12, it could really bottom at any moment at 12. It doesn't. It may not get down this low. I wouldn't be surprised to see a bottom at 12.9, 12.8. MicroStrategy formed a new connector. We had this as the connector, and then it took a different shape. So now it has a lower target at 953. So that should tell you Bitcoin has more downside, which we all know. Riot getting close to the first buy point here at 6 in the 6s. Okay. So that gives you an idea of what's going on in crypto these days. And let's look at commodities. Again, Chevron, beautiful rejection. We were a little short, like by about 50 cents or so. So that's why you can't, you might not get the perfect setup like we had here. I mean, those were perfect setups. But here you have another one. So we'll see if we can get some of this continuation going. XLE, the super, confluence of indicators, and it did get a nice rejection. That's good. So if we were to come back and overtake that level, I would get out of the short position in energy, because you're correct. This move corrected this whole leg, so you would have a whole nother leg higher. So this is a very important pivot for the short side of the market. Devon did break down where we expect it, and down we go, and it should be in a very long consolidation here. Halliburton, that's not, Schlumberger, we are reversing like we want it. OIH, we're reversing. The energy market in the last, since my last update, playing out like we've expected. No surprises there. BTU came up. Looked like that's the low. It did not make it to 21. We got to 21.80. So there's a good chance that's finished here. That too is finished, and we're now in a new cycle higher. But one of the things to think about is if energy is going to go down, natural gas is going to go down. Just be careful that we're not forming a connector for a bigger move lower. So in some ways, we have this box may become negated. And he set up on cold. They screwed up my chart again with these splits and stuff. We'll have to go back and fix it. GDXJ is in a wave 2 of this cycle off the low. There is no connector wave here. It could be a flat. If it's a flat, it will be pretty much done at any moment. If it's not a flat, we really need a connector wave, which more than likely this is what this is starting to become. So you could probably put your pivot here at $40 because if you really look, you really do have a connector wave, even though it's very shallow here. So we'll see how this plays out soon. UUU is another fun one, and we're finally getting into the buy area. As you can see, you have 3 connector, one, 1, 2, 3. So yeah, so we're maybe 520, $5. So that's my look at the market, guys. I do think the market is set up to bounce pretty good, either in another connector, right, and 2 continues on, right? So you have to pay attention to that. That can happen. Or you find a major low and no one's ready for it. So that's how I look at the market. I don't know what news would drive all this action. I don't really care. I just trade the chart and I let the market stop me out. And I don't worry about the news. I don't worry about the war, what's going to happen in the dynamics. I just trade the chart and then I let the market stop me out. The market will tell me when to leave the market and when to enter it. I don't care about news headlines. I don't trade on the news because it's so hard to gauge the news right now. I don't know why the 10-year is going to take a dump here. Is it the economy sucks so bad? Dump. Is it risk off? Scared panic market sell off? Dump. Is it Powell Operation Twist surprise? Dump. Is it inflation is tame and the next CPI? Like, I don't know what would cause it, but I don't care. I just know there's a good setup right now to buy bonds. To buy bonds. It's just that's what this is telling me. And then you make a decision on when to stop out. So if you want to look at this TMF trade, okay. So granted, I'm a little early. I picked it up at 43.70-ish. Yeah, it could go to 42. I don't really care. Where do I stop out at? 38.36. So that's my risk. That's my risk. But my reward is, if it's 3 swings, is $80. It's a doubling. Now, I don't know how long it's going to take to get there, but that's the risk reward play. And then if it does do this and break this, then we are in a different situation in the market. We're in like that next leg lower. If that starts playing out, the 10-year should take out this high at 5, and now we're starting to run to my 7% targets or higher. We're in the next wet leg higher. That's our wave 3 in rates. We've talked about this a million times, and more than likely the market really is going to get hit hard when that happens, which would mean perhaps this setup here really pulls back pretty deep. But I think what would fool a lot of traders is they would be expecting, like, oh my god, all new lows, a flat, and it won't be. It will just become a really deep wave 2. Remember, wave 2 can come all the way back down. That's what I would expect happen if that 10-year runs. Now, if it gets really out of hand, then maybe there's enough from a market dynamic standpoint to collapse it, to collapse everything. So we keep an eye on that, but I think what we've seen is, think about where rates are and where the market is now, and then where they were when last time they were at that level. So the market is going up faster than the rates are rising. When the rates rise, the market goes down slower compared to when the rates fall, the market accelerates. So that disproportional effect is creating separation on the upside, which is creating space for the market to fall without breaking some of these key levels. So that's what I'm seeing happening. So that's why I think if the rates go lower, the market more than likely will respond very favorable in growth and breadth. But why would that happen when all the news is just so bad out there? I don't know. And with Paul, when he just came out and said all those nasty things today about no, inflation is, still a major issue and all this, and I don't know. But I'm just reading the chart, guys. I'm just reading the chart. Now, if we break these pivots, we have to change. We'll have to change. We'll have to change. I think looking at it, if we break these pivots, I think it doesn't make any sense to be long the indices anymore. I think it makes sense to then just take the profit you've got from at 469, wherever that is. So if we start pushing over 5%, I think it's time to just take your profit and hit the sidelines and just wait for things to play out more and get a clearer setup. And then you just take the profit that you've got throughout the market from these cycles, because the entries we were in are here, and so we have a lot of profit still. So, but I think for me, if I see the 10-year come out here, it's time to leave. I can't be hopeful. Like there, then you have to change with the market conditions. And the market should be much more bearish, because what would happen is, again, even if we got this pump and we came back down, the technical break is over. It's clearly not a flat. It's worse than that, and we're going much higher in the months to come. And so you just got to start preparing for that situation. That's how I look at the market, guys. So keep an eye on this. I do think the 10-year is very important, and we'll need to wait and watch to see how it plays out. But this is where we are, and we'll go from there. That's all I got, guys. Talk to you later.